Hey everybody, it's Pete. Good morning. Today is Friday, June 12th, 2020. Exhausting trading day for many people yesterday. Today we're going to fix that, actually. Today we are going to give you a step-by-step outline of how to identify an A-plus trade. You know, I've been talking about that quite a bit on the channel, especially if you're a regular subscriber. I mentioned quite a bit. There's your A-plus trade. Wow, I got a bad shadow there. There's your A-plus trade, and then there's everything away from your A-plus trade. Now, here's why this is so significant. Once you have your A-plus trade, which is really your edge on the charts, there's no other way to put it. There's what you want to see where you feel like I have absolute conviction in this idea right now because of what you see on the charts. And then you take that a little step further, and then you start doing tape reading, which is you start to now put the pieces together for, I see an idea, but is it a good idea now? And that's really where a lot of people get into trouble, because it's not that hard to look at a chart and say, oh, it's going up, I want to be a buyer. A lot of people got caught with that last week with like stocks like Chesapeake and Oxy and the airlines, and even Boeing yesterday a little bit, right? So wanting to be a buyer and wanting to be a buyer at the right time, and the right time means that there's what I call room to go. So in other words, if you accept the risk, there's profit potential. And here's the key, this is the part that makes it an A-plus trade, is that the odds of continuing to move in that direction are strong. So I get a lot of feedback from people in the boot camp and obviously here on the YouTube channel, which I really appreciate. And by the way, if you find these videos helpful, absolutely click down and subscribe. That would mean the world to me, and you'll get updates. And also leave feedback. If you have any questions or comments, please, I encourage you to do that. But here's the thing. Overwhelm is the biggest question that I hear. In other words, there's so much to look at. What am I supposed to do? So today, what we're going to do is we're going to go over strategy. We're going to go over the steps required to identify good trades, and then we're going to break it down even further. We're actually going to take a look at the charts. Now, what I'm going to show you is just a little tiny piece of what we do in the boot camp, a tiny piece of what's in the order flow masterclass, but it's an important piece, because what I hope to accomplish in today's video is to really give you structure to be able to set up your charts, to be able to look at a stock and say, okay, this looks like a really good idea because the smart money is doing something and I want to follow them. That's the big thing. The last step is now the right time to do that? So in other words, has the stock traveled so far that the odds of it seeing profit taking increase, and are you buying when everybody else might be taking profits? So that's the last part. Well, actually, no, that's almost the last part. The odds of following through are almost to the end. The last part then is if you actually do find a good idea, then what happens between entry and exit? So in other words, if you buy it here and it goes all the way up here, for argument's sake, right? Did you actually hold it? Because there's so many trades we get in here and all of a sudden we see it all the way up here, but we got out over here. So why? Why did we get out there? And it really comes down to stacking the argument in your favor. So I hope this helps you. We're going to hope to try and reduce overwhelm. If you really want to take this deeper, I got a flood of emails last night in reference to people just really having no idea how to make a decision yesterday while the market was coming down and coming down hard. I strongly encourage you to just spend 5 minutes, scroll down and click through to the boot camp. It's real-time coaching. It's real-time coaching. You get my entire strategy. And at the very least, you're making a very small investment in yourself to avoid monster losses. We spent a lot of time yesterday talking about what to stay away from, and the overwhelming joy in the community yesterday and the grateful comments that we got were, thank you for helping me not be involved in this because it was a mess, and now you're in cash. So instead of getting your head handed to you and losing a small fortune yesterday, you're in cash, maybe taking small positions, and if they worked out or didn't work out, you really didn't get hurt as the market kept going down. But the key is you recognized it, and that's what we're going to talk about today. So I strongly encourage you to just click down. It will take no more than 5 minutes to see if it's right for you. You'll be able to see what other people are doing. But let's go over to the to a little presentation I have for you today. And we're going to start out here with the obvious thing that we want to discuss, which is trading with conviction. Because if you're overwhelmed, the opposite of that is you are 100% convinced that you're doing the right thing, right? So we're going to talk about strategy. And the first part is the trading plan, right? Obviously, the trading plan means that you've taken your edge and you've built your edge into a coherent outline for you to take action. That's really the biggest part there. The trading plan is you basically saying, I know exactly what I'm going to do. I wrote it down, and under these conditions, that's what I'm going to do. And I'm going to show you a very tiny piece of what those conditions look like. But I think it's going to be really important for you because it'll help reduce the confusion, which is, again, obviously the opposite of conviction. Next, we have money management and risk management. They're not the same thing. Money management is how much you're risking per trade, per day, per week, per month. Risk management is how you're actually managing the trade. So you're actually managing the risk and your leverage all at the same time. So remember, when we're putting on ideas, we're looking to maximize opportunity in stocks that are liquid, which means that a lot of people trade it. You can get in or out at a price that you like, generally speaking, because they're liquid, right? There's bids and offers at every price. And there's also volatility. So within the risk and volatility, there's risk management. There's what happens if it moves in my favor, what happens if it moves against me. That's the part what happens in between entry and exit. So money management, risk management get confused sometimes as the same thing. They're not. One is before the trade and one is during the trade. That's a very big distinction. So next we have the game plan and outlining your strategy, right? So the game plan outline is essentially you have your strategy, you have your edge, which I'm going to show you again, a very small but very definite edge. It's structured. That's the biggest thing you want. You take your edge and then you go find stocks that match your edge. That's by far where so much money gets lost. And even yesterday, again, think about your own trading yesterday. How much money would you have saved yesterday just having a clue to say, oh my gosh, this is a mess. Why would I get involved? Versus, what do? I have no idea what I'm doing. You need to have an outline that says this is exactly, and wait till you see the next slide. The next slide is really cool. And then last, game plan examples and trade management. We're not going to cover that today. That's actually what we do in the boot camp. We actually go over that in real time every day. And then obviously in our coaching call. So that last part is going to be saved for the other side, right? All right, so an outline, a path to a trading plan, and the trading plan, remember, ultimately becomes your game plan. So what I'm about to show you are the ideas that start out as your trading plan. This all goes into your trading plan, and this is a key point. I want to just come back to the screen really quickly. This is a huge part that traders that are losing money don't understand. Traders that are struggling. If you're telling me I'm overwhelmed, this is a big part of it. It means that you haven't taken the time to say, this is what I need to say. And if you have, then you have to follow it. That's a big key, because quite often you'll put on a position and say, oh gosh, I hope it comes back. Oh gosh, I really hope it moves in my favor. That's not trading. That's placing orders. That's placing orders and then hoping that you prove yourself right. We never want to do that. In the community, it's all about taking responsibility. That's a big deal when you're a trader. You want to say, I am responsible for these results. If it moves in my favor, I have a plan for what I'm going to do. If it moves against me, I have a plan for what I'm going to do. And a big, big part of being successful in the long term is avoiding low probability situations. And especially if you don't understand what's going on, is to stay in cash or reduce your share size. You can always put those shares back on, or you can always get back in it a second time. Never, ever, ever hold a trade that you don't understand what's going on, ever. The quote that I use all the time, and it's easily one of the most popular things when I had my trading floor in New York City. Close your eyes and imagine that you have a position right now and you're not sure what to do. Well, maybe the circumstances have changed and it starts moving against you. Here's what I want you to write this down. If I didn't have it, would I want it? Think about that for a second, because your answer is going to come back immediately and be like, oh, this thing's a mess. Then get out. Stop rationalizing. Stop talking yourself into a bad idea just because you own it. If I didn't have it, would I want it? Okay. So we're going to finish up. We're going to go into the slides now. Finish up. So this is kind of cool. I built this because I wanted a visual way to help you understand. You start out with a solid foundation and then you work your way up to the last pieces. And what's ironic is most people start at the top pieces that are the most insignificant, which is the entry and exit, because none of that matters if you're not in a good idea in the first place. So remember, reducing the overwhelm means making it simple. So the very first thing we want to do is you want to be able to identify the smart money, identify the order flow. So again, the key here is buyers or sellers are doing something obvious, and now I want to see how deep can I take that equation. So next thing you need to notice is a pause. Are you in accumulation or distribution? These are periods of consolidation with volume. Now, accumulation or distribution happens after a significant move. That's important to remember. So accumulation, you're going to the upside, you see a pause on heavy volume. That's generally the smart money getting out of trades and giving money to the uninformed traders. And after a long downtrend, you see a consolidation, tinier trading ranges with heavy volume. That eventually is the smart money starting a new move, which eventually leads to a markup or a markdown. So a markup is after a stock goes down and goes sideways on heavy volume, that's when the smart money's buying, and you generally see it break out to the upside, and now prices are being marked up. The opposite of that is when you have a very strong big rally, stocks go sideways, they're in a whippy type price action, and volume is very heavy, but it's not really advancing. Coming out of that is when prices start to get marked down. The smart money is now out of the trade, and uninformed traders are riding that sucker down and not making a decision, hopefully, that I'm teaching you how to do today. So you're looking for the smart money, you're looking to see if there's any accumulation or distribution, and then you're looking to see if that led to what we might call an uptrend or a downtrend. In prop trading land, that's known as a markup or markdown. Next, there's 3 different ways of identifying how you want to be in the trade and whether or not it's turning. Potential change of trend is one of the most difficult areas to recognize until it's over, because it's not quite turned yet, but it's not quite going up or down anymore, right? So we're going to actually talk about the last one here, candlesticks. If you're a regular follower of the channel, you know that I do all of my game planning, I should say 90% of my game planning, only using candlesticks on the chart. I don't use any moving averages. Then I work the trend lines, and then I go to see if there's any key levels. Like yesterday, for example, in the market, we pulled all the way back in the SPY ETF to the 20-period moving average. You needed to know that. Next, we have multiple time frames, getting in sync and assessing potential. Remember a couple of minutes ago when I said you can find the right side. So you pick a spot, but then you say to yourself, is now the right time? And we saw that in a lot of trades. The last week, people were buying Chesapeake, Oxy, GNUS, and even last week into this week on Boeing. I'll keep using Boeing as an example. What is the profit potential? What is the decision you have to make to assess? What are the odds of it continuing right now? And is it worth accepting the risk? So you need to be able to finally understand, and again, this is, I want to make it clear, this is what we do in real time. You need to be able to make that decision before you put the trade on, which again, I call that tape reading. Is price moving closer to or further away from something? And then you make the call on whether it's okay to accept risk. That last part is by far one of the most challenging aspects for traders. They don't understand that last piece is getting to the point where, is it okay to buy now? Everybody just wants to buy, everybody just wants to be involved, but you have to say, if I'm going to accept risk, what are the odds of me earning the profit? That's a big part of trading. And last but not least, as I said, most people go straight to the entries. It is really the last part, the smallest part, the tiniest part, incredibly, incredibly important, but it is not the most important part. Because remember, what good is the perfect entry signal if the trade idea is bad? What good is a trading entry signal if it's too late? Now, how do you know it's too late? Well, we talk about that often where there's stocks that are well bid, well offered, and that kind of stuff. So I'm going to end this video just giving you a very brief glimpse into one potential way for you to identify whether or not you want to be a buyer or a seller, and whether or not you want to be a buyer or a seller now. And again, I strongly recommend this. I don't know how much money you made yesterday. The market was very, very crazy yesterday. If you felt overwhelmed yesterday, and if you felt lost and you couldn't make a decision, please click down, learn about the 30-day boot camp. Just, if nothing else, it's a small investment in yourself to understand what you're looking at. So we're going to take a quick look at the charts here. If I could pull them up, let me just grab them for you. And then we're going to go back to sharing the screen, and we're going to put it back up. So what we have is a chart, 4 charts of Square Inc., right? So I want to point out the top left-hand corner. It is a 3-month worth of price action. So basically the last quarter. So most stocks report earnings quarterly, right? From quarter to quarter. this isn't quarterly from an earnings perspective, but it is quarterly from each one of these candlesticks represents 3 months worth of price action. So here's the key that I want to get across to you. You want as many of these different time frames. This is 3 months. This is 1 month. This is 1 week. So that represents 5 days worth of price action. So this red candlestick here is Monday through Thursday. Since today's Friday, Friday's not unfolding yet. And this is the daily candlesticks. So you can see here we had 3 months worth of green, which means buying in square. Then you can see that we had 3 weeks of buying in square. We're pulling back a little bit now, right? Then 3 months of buying. This is 3 months. This is looking inside those 3 months, right? So this is month 1, month 2, month 3. So as long as the longer term is staying green and the shorter term months are also green, and the weekly candlesticks, so you can see here, looking for well bid, which if you know now you've been watching, you're seeing higher highs and higher lows. How long would you stay with that? Well, until that changes. So this entire period here was green. So 3 months of green, 1 3-month candle, 3 consecutive months. So now you can get an idea of during this candle what's happening. So you have green, 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 and red. So something's changing. The point that, and again, I want to make it clear, I'm just slightly introducing this to you right now. If you're looking at a chart today, right now, take a look at the monthly candlestick, take a look at the weekly candlestick. See if they're the same color. If you take a look at the monthly candlestick and go down to the weekly candlestick, you want to see the weekly candlesticks, and let's use green as an example. If there's buying on the monthly candlestick, you want to see green on the weekly candlestick as well, but a step further is you want to see well bid. So in other words, you want to see the weekly candlestick be green and have higher highs and higher lows. So that tells you that it's order flow and smart money is doing something. They're stepping up and they're holding lows and they're creating new highs. Now here's the last part. Should you buy now? Well, how many days in a row? That's when you can now go all the way down to the daily chart. How many days in a row has it moved in that direction? And what are the odds? You have to look to the left and say, how often does this stock move in one direction? And how much does it normally move? So you should, and here's a really big key. Look to the left and say, well, this stock normally moves $20 when it has a rally. And yes, the monthly candle's green, 3 consecutive weekly candlesticks. But, wow, it's already gone 18. Why would I buy at 18 when it normally only moves 20? Now you wait for a pause in exchange for the next $20 move. Now we're putting the pieces together, and that's how we work our way up to the A+ trade. Make everything simple. It does not have to be complicated, but it needs to be definite. That's the big thing. So we covered a lot today. I just can't express enough. If you're overwhelmed, if you're confused, if you're not sure what to look at, that just means that you need structure. It doesn't mean that you can't do it, but it does mean that you need to get organized. And I'd really like to help you with that. If you're interested, and if you're interested in making that small investment in yourself, scroll down, look at the boot camp. Otherwise, in addition to, please leave some feedback and definitely subscribe to the channel. I hope you find these videos helpful. Have a great day, everybody.